Get rid of some of these previous stuff. I just like TRVL because on the higher time frame we're forming this really lovely structure on the higher time frame. We're creating a building, we're creating a solid foundation, and I like that. I like this foundation that we're building at the lows. We're building a foundation at lows. It's very different to, I'll give you an example. Let me put it on the dual screen here. Let me get one of these newer coins here. Let me see that one here. So this is a Rollbit coin. No one's probably heard of it. Actually, I have to disconnect these so I can let me show you. So these are both, are they both the weekly time frames? Yeah. So this is both the weekly time frame. So this coin launched June 23. Looks really bullish, right? After it launched, it's up almost just under 5x from the launch price, and it's look, it's just gone up and it's gone up and it's looking to go up. It's quite a bullish structure, you know, higher highs, higher lows, higher highs. Maybe this is a higher low, and it's just gonna, maybe it's just got bullish market structure, so it's quite bullish. The problem with this token is, I mean, it's a good and it's bad. It's good because as every time it pierces the highs, we're in price discovery. That's the all-time high. This is all price discovery area. Price discovery, there's no volume. So if someone wants to get in with a larger position, they can't. Effectively, they mark it in and they push the price up significantly. So if you were to wait for the all-time high in this token, the price comes up and you get a little back test, and that's your entry, and you want a nice large position. It doesn't really have to be that large even, because the volume on this isn't crazy volume. Hold on, actually, wait, let me see. 8 million. Let me see what 8 million is. 11 million. Actually, that's not bad volume. Let me see. 11 times current price is 0.14. The volume is actually quite good. Look, it's like 1.5 million. The volume is quite nice actually. I stand corrected, but still, someone comes up here and they want a large position. They want to buy like a couple of $100,000 worth. There's just not enough liquidity to fill that bag, because the way it works is that when you're buying, someone has to sell, and if no one is selling at the price that you're buying, the price goes up until it fills, until the order fills. That's how it works. So if you want to buy at a certain price with a larger position, you can't fill it at that price unless there's someone selling that same amount that you're trying to fill at that price. So what happens is you get someone comes in, they're really bullish and they're a whale, or they got a large amount of gains from some other altcoin, and they go market buy, and then suddenly the price is up here, and they've only bought like $10,000 worth of this token. So the price has gone up 127%, and someone has only bought like $10,000 worth of this token. Why? Well, quite simply because there's no volume, there's no orders, because you're in price discovery. When you're in price discovery, there's no orders. It's empty. It's just spots and market maker orders, but not like significant orders, because the reality is that a lot of these people here, they're hodling. All of this volume here, 116 million or 200, they're hodling. They're just hodling. They're probably hodling for the duration of the bull market, and they're waiting for this token to get to whatever exit it will get before they start taking profit at a much higher price. So the problem, it's very different to TRVL, very different. And the reason why it's different is because these lows have not been tested. These lows have not been tested, yeah? And what that means is that you have a large amount of volume in the launch which hasn't been extracted from this token yet. So look at that volume, that's 357 million. At the current price, 357 million. At the current price, that's 0.144. That's $51 million. It's $51 million of value at the current price. Yeah. If that person or persons was to sell 350 million tokens, well, look at the daily volume. Look, 350 million here, and here the daily volume is 8 million, 10, 11 million. You're not going to be able to do it just on this whole rise. 15, let me calculate. 15, that's 30 plus 20, 20, 35, 46, 59, 18, 91, 91, that's 102, 102, 110. So 110 volume has taken the price down 45%, 110. And here you've got 357 volume just waiting. So if they take profit now and start selling, or if all of this comes out of the market, leaves the market, a third of that volume took the price down 46%. If all of that volume comes out of the market, you're going to come right back down to the lows. For sure, you're going to come back down to the lows. Easily, you're going to come back down to the lows. That's the problem. The problem with this token, with all of these newer tokens in the bull market, is you have a large amount of accumulation. It's not accumulation even, it's just IDO. It's just initial investors or those who are extremely early to the launch of the token were able to accumulate very large amounts of token in the first instance, and they haven't taken their profits yet. They are paper multi-millionaires, but they can't get out. They can't get out because there's not enough liquidity to get out. And this is the problem. So the price that you're buying now on this kind of token is not the real value. Is not the correct value. The correct value would be if all of these people sold, and then you'd have the correct. So there's some kind of balance to the market, where most of the people have, and they're only holding on to the value that they're willing to hold on to. Most of these people are looking to sell. They're not looking to hold. They're waiting for higher and looking to sell into the rises, into the pumps. Yeah, they're not looking to hold. It's not a long-term hold here. It's a shorter-term trade, and they're just waiting for higher prices. And if all of these people who are in profit now, if for some reason the price of this coin came here, all of these people would sell. They dump all of their tokens, and actually then you would end up with a true value of what this token is worth. So what you're experiencing here is just a hyperinflated value. It doesn't mean you can't accumulate this token. See, it's all about context. The context of the bull market, the context of Bitcoin making new highs, the context of Bitcoin ETF and all the value, all the volume coming into Bitcoin, which then later transfers or whatever, it goes into the altcoin markets or the other markets. This will probably still rise. It will probably do whatever X it does. You just have to be aware of what's going on, because eventually, one time in the future, however far high this gets, it could get up to, let's just say for the sake of this example, from the launch price, it did 50. It's 50x is there. That's that level. So $1.45, $1.5. Right, that's from the launch price, not from the current price. And the current price, that would be basically a 10x. Right, that's fine. That's when a lot of these people would start selling, and they have to sell on an injection of volume. Usually that corresponds with exchange launches, tier 1 exchange launches. But eventually, once you get into the bear market, once Bitcoin has peaked and now it starts to correct, everyone starts to sell. Sell. However high it gets. And that's when there's nothing in the charts. There's nothing here that's going to hold the price. There's no orders, nothing. There's no structure, basically. It's effectively a pump and dump. Long term. Doesn't mean you can't make money. You just have to know what's happening. Now, the only reason it doesn't pump and dump, the only reason would be if all of these initial investors here would set limit orders and hold the price back here when it went up, so they defend the low so it doesn't make a new all-time low. But a large part of the reason why that might not happen is timing. If Bitcoin has reached this peak and it's dumping, and now everyone hearing this is escaping this token and just dumping all their tokens, it's the wrong time. If it's like July 26, it would be the wrong time to start accumulating this token, and there's no reason why this token wouldn't continue going down. There's no reason why. And that would look extremely ugly, because now you've made a new all-time high, and now you're going into all-time lows. That's just a really terrible coin, because the original investors haven't defended the lows, and part of the reason why that doesn't happen is timing, right? So when you compare that with this token here, now trvl launched at the peak of the end of the last bull market, and ever since it's been selling off. Effectively, what we're seeing in this kind of distribution is everyone who wanted to sell has sold. It's like it's exhausted. The whole market is exhausted of sellers. It's taken 2 years to achieve this, but literally everyone who wants to be out is out. That's what this chart is telling you, right? And everyone who is now accumulating to be in is coming in now at the lows. And how do I know that? Because if you do, I've done it millions of times before, but I'll do it once more, just so you can see. If you do a volume range pool, and this is only on this exchange, but actually I've looked at all the other exchanges and they pretty much say the same thing. You see that over the 2-year course of this token, most of the volume is either here or it's at 2.5 cents. You see these two long nodes here and here. Most of it is here where we are now. It's at 3 cents. But you've also got a high volume node at 2.5. So that's where the volume is. So over the last 2 years, most of the volume has been at either 3 cents or 2.5 cents. Okay. and that is because it's at these levels that people are accumulating. It's going to be a completely different story to this other token that I'm telling you. This token, this one here, will rise and then it will fall. Whereas this one, what we create, like, there's no structure in the mark. When you look at the weekly time frame, when I'm comparing them, look, these red candles are structure, and these red and green candles is market structure. You see these, when it's just greens and no reds, there's no market structure. So all these, like, you see all these green candles here, green, 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 green. It slips, the price slips back down the green ones very, just as quickly as it goes up, it slips back down very quickly, yeah. But what we have now is we have on TRVL, we have structure being built so that eventually when the price does kind of work its way up and it comes back down, you have all of this market structure which acts like a building block as support. It acts like a foundation block. The price is going to find it very difficult to get back into this structure once it's past it. Yeah, partly because of the volume, showing you the higher volume nodes. It's just showing you that this is where the demand is. There's high demand here for this price. At these prices, if this suddenly goes up to 6 cents and then comes back to 3 cents, everyone is going to see that as a massive discount, and the structure will hold the price. Well, this token here doesn't have that structure. If, for example, who knows if it could happen, when it could happen, but if this price, if this token starts to trade underneath this last bit of structure here, these like 2 red candles, that's your structure, because then this is all green candle, there's no structure there, that's just, it will slip down. These green candles, do you have red, 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 it will just slide down because there's no structure. And the idea of this is that when you get this kind of red and green reversal, that's where the order blocks are. Yeah, so you have like an order block here, you have an order block here, these are limit order blocks. So you're gonna find the price come down to these levels, and it's gonna find support. Once you lose those order blocks and you've lost support, there's no more order blocks. Where are the orders? Well, right at the all-time low then. That's the problem. Whereas now, when you look at TRVL, you know, we have order blocks. We have an order block there. We have an order block there. We have high volume nodes. Basically, the price has been in this range since December 2022. That's how I'm viewing this for TRVL. And people are looking at this and going, the price is just dumping, or the price is going nowhere. But all we're doing now is we're just forming market structure at the lows. This is extremely bullish because eventually the price will never get back here. It will be like a foundation, and then we're just going to be building upwards, and then the price won't come back down. That's effectively what this is meaning. Let me have a look. So if I do a range pool here, so let's just say hypothetically we're underneath this level here. And this is the whole range. That's the range. We're in that range now. You split this into 2 ranges. Now hold on a second. So basically, if you break this chart into two sections, into two effective ranges, you've got this upper range, and then you have this kind of lower range. Let me change the color of that. All right. And now we're in the lower range. I think what you're going to find is that eventually when the price gets back into this upper range, there's so much market structure and volume that's been established in this lower range that it's going to be very difficult, if not impossible, for the price to get back into that range. Everyone here is going to be in profit, every single person. See, this is the thing, once you get back into this higher range, all of this volume, every single person here, they're not just going to be in profit, they're going to be in considerable profit. You know, just going from here to the range dividing line, it's a 2x. It's only a 2x up. So anything you buy now of your initial investment, once we're in this upper range, you'll be at least 2x up on your investment, any accumulation down here. And naturally, people, as the price goes up, will be taking profit. That's what I was talking about in a previous video. So no one is going to be under threat of becoming underwater, and you're going to end up with hodlers. A lot of people here who are accumulating are going to be hodling. There's a completely different kind of idea to all these new tokens that are launching in the midst of this current bull market. Sure, they're going to pump, and most of the people who benefit are the early adopters, very early adopters, and the initial investors. Most of the people who come afterwards, they don't benefit that much because they don't have the bigger positions. It's very hard to accumulate big positions. Whereas with this token, everyone now can accumulate a position, a big position at the lows. Like right now, we're from the all-time low, it's only 35% lower than us in the scale of going back to the all-time high. Which is 4,900% above us. Yeah, so 35% down to the all-time low, or 4,900%, which is a 49x to the all-time high. Everyone now who is accumulating in this token can be like an initial investor or an early adopter, a very early adopter, because now everyone can accumulate a large position. Yeah, it's like basically knowing the future and having the time to react to the future. Whereas with one of those other tokens that are launching in a higher, the Bitcoin bull market, I mean, who's benefiting from those? I mean, you're going to get maybe a handful of investors, maybe another handful of the core team who are benefiting, who have most of the tokens, and the rest is hype. You know, it's very different, a very different proposition to what we're experiencing now. When you look at this chart, everyone who has sold has sold. Everyone who wanted out is out. Even the initial investors. You see this high volume candle, and then it just sold off. And then because we lost 9 cents, which was the launch price, we lost that level. The initial investors are out. A portion of the initial investors are out, which is good news. It's good news for us because we launched at 9 cents, and you can accumulate this token right now at 3 cents. That's a discount. That's a big discount. And eventually this is going to go up. And you know, we don't want this to be a pump and dump token. We want this to be a long-term accumulation. And eventually, when it does go up and then pulls back, you know, I don't ever want to see this token come back into this lower range. Yeah. And it won't, because we're creating this market structure which is going to act as the foundation for this for this chart. And actually what I'm hoping for potentially is a higher time frame cup and handle. That's what I'm hoping for. I'm hoping that we form something like, I don't know how high it's going to get, so let's just say it's going to be somewhere between the top of this channel that I have and 5, which is the 1.618 fib extension. I'm hoping for something like let me draw it properly, some kind of cup and handle pattern. Don't know how low it's going to get in this bear market, but I don't think it's going to be just a kind of, it's not going to be a pump and dump, because we will, as we go up, we'll be creating market structure. It's not going to be just empty. You know, you've got levels. As we go up, we're flipping levels. You see there's levels on the way. I've got these levels marked out. We're flipping levels, key long-term higher time frame levels, from resistance into support. That's effectively what will happen as you go up. You're flipping them into support. You know, you're flipping them into support. And let me do that a bit better. So you're going to go up, resistance, and you're flipping them into support. And that's how you're going to go up. And you're going to have like these levels, key levels, which then as the price comes back down, it's going to act as support. You know, then if you break a level, you have another level which is going to be your support. And this will remain bullish, and this is the key. So let's just say, for the sake of argument, get rid of these again so it's clean. Let's say, for the sake of argument, we're about to print a wave 1 on a higher time frame Elliott wave. So 1, 2, 3, 4, 5. This whole structure, that's your wave 1. Okay, so then we're expecting a wave 2, and a wave 2 is an ABC correction. However it forms, however low it gets, we'll be expecting something like this. So you've got a wave, you're expecting a wave, a 5 wave up, which is your wave 1, and then you'll be looking at an ABC correction. Don't know what this is going to look like, actually. No one knows. Or, I mean, you could also have an ABCD correction. You know, you could have something like this as well. That would be a corrective move as well. So and there's other kind of styles of correction, you know, and it doesn't have to go far down. You know, it doesn't have to be deep. It can be flat. It can be flat as well. But the key with these corrective moves is that it's prolonged. It's almost the same distance as, in terms of timing, as the extension. You know, like you want to see it time. You can't see it. It's not going to be like really fast. It'll be longer. You know, you want to see a prolonged corrective move. But however it forms, it doesn't really matter how it forms. You're going to get a correction. Let's just say, for the sake of argument, it's like this, and some kind of correction like that. Now, this arm here is your wave 2. This is your wave 1. See, wave 1 is in 5 waves. Then you have a wave 2 that's going to be in 3 waves. Corrective waves are 3 waves usually, unless they're 5 waves, but they're horizontal, they go sideways. But anyway, most of the time it's like this. And then in preparation for the next kind of bullish impulse, we'll be looking at a wave 3. Okay, now this is the whole structure is correct as long as, and this is the condition. The condition is that this corrective wave 2 does not fall below the all-time low, which is all the way back down at 1.9 cents. Okay. If that was to happen, the whole count resets, and actually that would be the most, that would be, I mean, you might as well just throw this token into the trash can if that was to happen. Okay, that can't happen. And what we're creating now in terms of the higher time frame market structure, which is what I've been talking about, this structure here is gonna prevent that from happening. There's a lot of tokens out there, they're gonna go up, make all-time highs. Everyone is gonna dump that token and it's gonna go and make an all-time low. You can throw that token into the trash can, basically. It's effectively a rug pull. This is not going to be like that. The reason why it's not going to be like that is because of all of this market structure that we've been. This is a higher time frame market structure, yeah. And so I don't ever expect, once we cross 9 cents, and I don't actually even think we're going to get back down to 9 cents personally. Personally, I think we're probably going to be heading, if we can manage to get up to like $23, $25, which is the most, in my mind, that's the most bullish case. I think the most conservative case would be the all-time high back at 1.56, and I think the most ordinary case would be the top of this channel with a kind of a really kind of a shorter 5, which would take us to about $6.9. So I think this is the most ordinary case, a $6.9 coin. But I think, as I've said in the previous video, with an exchange launch, with the price trading above the all-time high of 1.56, I don't see any reason why we can't push up to $25. I just don't see why it can't happen. So let's just say I'm right, because that's the whole, because we want to be positive, you know, and that's what we're kind of hoping for. 25, then I think it would make sense for that to correct. Like if it came like in at 98%, coming back down to back test one of these support levels to like 50 cents, that could make sense in context. It's all in context of the Bitcoin bull market, context of the tokenomics, because I know the tokenomics are changing, and we don't know how those we know the tokenomics are going to be extremely bullish for this token, and it's going to be a long-term hold. I don't know if this is going to do this, to be honest with you, this corrective wave. We'll have to wait and see, because based on the idea that I have, we might also experience some kind of something like this. I'm thinking something like this could work as well. Like let me see, just this channel, maybe with something like that. Because I know, I think people are gonna be like really amazed at the tokenomics once they're proposed. I don't know how this could be, but just for the sake of argument, I'm just thinking this is probably going to be like a more of a, I don't know, I mean, it depends on how high this gets. Let's get rid of that line. maybe like a slope, and taking these lows. We don't know how low that's going to be either. Could it be more like that? Then you lose the channel. You come back to the test the channel. Come back to take the liquidity. You're right in time with the next bull market. Yeah, something like that. Before you make like you make another push up for the, and you could possibly, if we can hold, I think the most bullish scenario for this token would be to push up to $25 and consolidate for the next 3 or 4 years above 1.56. Oh my God, if you were to see this kind of play out, this kind of pattern, this is unbelievably bullish. This is basically, this would be perfect. It'd be a cup and handle, and then the next wave from, you'd be consolidating above the previous all-time high. All of this bottom bit is market structure, which is just the best foundation, and then you could be laughing. You could be talking about another Elliott, that if that's wave one, the wave three is usually more impulsive and more bullish. I mean, you could be talking about a crazy high price coin. Just trying to think, how far up would you expect this to go? Probably $250, $300, $400. Probably from somewhere like there. Who knows? And then if it came back down, it wouldn't get, this would be your wave three, and then $25 would be your foundation. It wouldn't get back down underneath that for a wave five. Yeah, something like that. That's basically what you're talking about. And look, I mean, I'm doing all of this on the log chart. You know, when you look at this price action on a regular chart, it's going to look very different. Look. See? This is going to look like Bitcoin if it did that. Yeah, a lot of people look at the price chart, not the log chart, but I think it's not helpful. I think you've got to view this on the log chart, and then the rest of the retail will look at the price chart, and then they're going to jump in. But when you're charting, you should always chart on the log chart. Yeah, this is what I'm envisioning actually. Something like that would be nice. And the tokenomics is going to play a major factor. I think the growth of the network is going to have an important role, and obviously the AI engine is going to be key. And then all of the integrations with the other networks out there, like trvl is one of them. But I mean, obviously Google vacation rentals is a big deal. But who knows, you know, down the line, you may be, you know, a lot of other kind of affiliates might be taking our stock of properties and putting it into their search engines. And the biggest difference between us and everyone else is that we're Web3. But we're going to be a true Web3 application. And this is the thing. A lot of Web3 applications, they're not true in the sense that it's not like Bitcoin. If you think of Bitcoin as the most pure Web3 application, you know, the block rewards and the competitive nature of winning those rewards and the peer-to-peer real physical world network, and how people are competing with their mining rigs to solve this equation, this pointless equation, and whoever solves it in that period of time wins this reward. We basically have the same thing, but better. We're going to be a better Bitcoin. We're basically going to be store of value 2.0. And what's going to make it better is that while Bitcoin have all of these computers and mining rigs around the world trying to solve this pointless equation, waste of energy, Our network is not going to be a waste of energy. Our network is constructive energy. It's positive energy. It's travelers' experience, traveling experiences. It's the rental of vacation rentals, transactions between hosts and travelers. And that energy, positive energy, is going to be converted into TRVL. It's better than Bitcoin. And the tokenomics is going to be a store of value. It's going to be better than Bitcoin's store of value, because with Bitcoin, you can't do anything with your Bitcoin. You're just hodling. With this, people will have something to do, and it's going to be very useful, because you don't need properties to have vacation rentals. You only need TRVL. I'm not going to reveal the details. I don't even know all of the details. I know some of the ideas, but I'm waiting in anticipation for the announcement on Telegram and Discord. I think James said today in Telegram that it will probably be first proposed in a blog post and then discussed in Telegram and Discord. So the wider part of the community is going to have their 2 cents, and obviously then it's going to be put to a vote in the remit of the DAO. But this, what I'm seeing on the charts now, is in the context of the tokenomics and everything else that's coming. That's what I'm seeing. And I don't know, maybe in a few years' time we're going to look at these charts again and go, wow, I'm Nostradamus. I predicted the future. That would be cooler. All right, so that's TRVL. I did want to have a look at Floki. Where did I put that? Let me see.